Hello everyone and welcome to part 3 of Introduction for Financial Accounting. So in part 1 and 2 we learned about the financial statements, assets, liabilities and shareholders' equity. But today on part 3 we're going to learn about journal entries. And for those who don't know what journal entries is, it's the act of recording or keeping track of any financial or non-financial activities. And it is an accounting journal records transactions and displays a company's debit and credit balances. Each recording in the journal entry can be either debit or credit. And the best way to master your journal entries is to try to do them by yourself. I'll try to do some with you to ensure that everything is correct. But the following questions I'm about to show you is inspired by accounting workbook, and I will also leave a link below the video so you can try it for yourself. So we can start by looking at the questions. So in February 2021, ABC created a business called Company X. The company is focused on consulting other businesses with their expertise. Yeah, so it's a business to business. It's a consultancy, more or less. So what we're going to do now is look at the journals and look how to record everything they've done in February. So we can start by looking at the first journal. So on February the 1st, the founder invested £10,000 cash for 100 common stocks. So we can see that he or she, the founder, invested £10,000 in cash. So of course we will debit cash, and we will credit the common stocks then. As you can see here, we have cash for 10,000 as debit. It's written as DR, and common shares CR. You see here credit 10,000. So that's our first journal entry. Let's go to the next one. So on the February 1st, the founder then, I wrote this pretty bad, but the founder leased property for £500 for the entire month of February. So what we need to do now is that obviously we're going to debit rent expense, and we're going to credit cash because he leased something. It was money going out, right? So the rent expense 500, cash credit, and on February the 2nd, ABC took a £7,000 long-term bank loan. And what we need to do then is to consider that we receive cash, so we will debit £7,000, and we have to do bank loan payable. And payable means that we are going to pay someone, in this case the bank, for 7,000. And as you can see, cash 7,000, bank loan payable as credit here. It's straightforward, it's not that hard. But in order for you to master this, you need to do journal entries by yourself a couple of times to really know what you're supposed to do. Let's go to the next one. So on February the 5th, ABC purchased equipment for £6,000, paid £2,000, with the rest payable at the end of February. Okay, so let's see. So they bought equipment for £6,000. So that means that we will receive equipments of 6,000. So we will debit 6,000 as equipments, but we lost £2,000 because we paid it. So we are going to credit £2,000, and we're going to credit account payable as well for the remaining 4,000. It looks like this. So equipment 6,000, we received cash, went out 2,000, account payable 4,000. Yeah, it's not straight here, but you get the overall understanding, I hope. Let's go to the next one. So on the February 10th, they completed their first consulting job and received £600 in revenue, right? So what we're going to do, we are going to debit £600, and we are going to put the other 600. We're going to credit revenue for 600. So we received 600 in cash and revenue 600 because it's revenue. Next one. February the 12th, the company purchased supplies on account for 200. So when this kind of question comes up, the most important thing to consider is that the on account bit right here. So we received supplies for 200 and we're going to pay for it later. So account payable. Supplies, debit, account payable. Yeah, straightforward. So on February 13th, the company completed another consultant job for 500 on account. All right. So what we're going to do is we're going to receive £500 and we're going to put 500 on revenue. So let's see. So we have account receivable for 500 and revenue for 500. Yeah. And the February 14th, the owner, I apologize that I didn't explain what happened in the journals more in detail. I just wrote the necessary part for you to get a general understanding. I mean, when you do this by yourself, it's obviously more text, and it's the founder decided to do something personal, to buy something personal, and it took a dividend or something like that. But for this video, I'm just gonna go the important stuff and for you to learn how it's done. So he took 500 dividend, £500 in dividend. So we're going to debit £500 and then we are going to credit 500 cash. Yeah. So dividends 500, cash 500. Next one. February 19th day, or the founder paid utility bills for £100. So it's obvious utility expense, right? And we lost £100, so we credit cash. So utility expense 100, cash 100. Yeah, debit credit. Let's go. Next one. February 20th, paid account payable for previous purchase for equipment on February 5th. So on the February of the 5th, we purchased equipment for £6,000, if I don't mistake. And we said we purchased for 2,000 and the rest would be payable later at the month, and now it's the time for later of the month. So we already paid 2,000, so the remaining is 4,000. So we will debit account payable for 4,000 and we will credit 4,000 in for cash credit. So as you can see here, it's account payable 4,000 and cash 4,000 credits. And if you go back to the February 5th, we can see what happened. Here we go. So the total amount we purchased for was 6,000, right? We paid 2,000 and we have the account payable for 4,000. So now we're just gonna pay it back what we owe. I think it was here, yeah. And we're going to make an recording like that. Next one. February 21. Received invoice of telephone bill for £100. All right. So obviously it's an expense. It's a telephone expense. So we'll debit telephone expenses. And we are going to credit account payable. Right? It's pretty self-explanatory. It's not that hard. Just read the questions and what do you get and what do you take out. And what you get is it's debit and the other one is credit. Yeah, pretty straightforward. Next one. February 24th, received payment for consultant job on February 13th. Okay, so we let me see, 13. Which one was that again? I'm just gonna go back and check. Oh yeah, okay. So we completed our job, right? And the account we debit account receivable, and now it's time for us to get paid. Let me see here. Let me go back. Yeah. So we're going to debit cash and credit revenue. Simple as that. we did a job. This told us to pay later. They paid later, and when they have paid, we're going to record it. Yeah. Next one, February 31st. Paid wages of, yeah. So your consultants or yourself or whoever working for you need wages, obviously. So we're just gonna debit salary expenses for 2,000 and cash for 2,000. So it goes out. Yeah, and the next one. Oh, oh, I see. Okay, that was the last one. It's the last of the month. Sorry, I didn't recognize it. So when all of this is finished, we have to construct each credit and debit in a thing called T-tables to make a trial balance, and more of that later. But it's essential that you start with the assets first, then you go for the liabilities, shareholders' equity, revenue, and last expenses. You simply just deliver the debits and the credits where they belong. So if you would take wages, if this was a T-table, imagine a T-table right here. So you write wages right here, and then you write the wages on the thingy. I'll show you what I mean. So here is the T-table for cash. So all our debits are right here. Yes, I didn't write it out for some reason, but the debits are here and the credits are here. Yeah. And what we need to do is that every time we have a credit for cash, we have to put it here, and every time we have a debit for cash, we have to put it here, and then we need to total them up. So all this together should equal this. I did it in Excel, so it might be an error, but it should be 18,600. The sum of all of these, and the sum of all of these should be 9,900 pounds. And 18,000 minus 9,000 would be equal to 9,500. Since the debit is greater than the credit, we have a positive cash, so that's good. If this one were less than that, we'll have a -1. Yeah, pretty self-explanatory. So let's show what I mean. So I can go back to the 10,000 because I think it was the first journal. Let me see here. 10,000. Let me see. And never mind, I can't find it. It's gonna waste your time and my time. Let's see. Let's go back it. So somewhere in the journals we recorded these for cash. So this is what happened in the February on the company X. Yeah. So let's go to the next one. So supplies, we only got 200 supplies, and that's how we're going to record it as debit, like here, 200 supplies. AR, it's a short for account receivable. So we credited account receivable, and we debited account receivable, and we credited account receivable. But these are equal, so they just cancel out. So this should be 0. You don't have to record this if it cancel out, but for demonstrating purposes, I'm doing you a favor to just show how it's done. It's going to probably to come more, but let's see. So EQ, equipment. I don't really know what I wrote like this, but when I did it, it felt pretty good. So T-table for equipment. Yeah, so we got 6,000 pounds of equipment, basically. T-table for AP. So AP is a short for account payable. So this is what happened. These two cancels, and the remaining total amount would be 300 pounds. T-table for bank loan payable. So bank loan payable would be 7,000. Yeah, debit, credited. T-table for common shares. So common shares, 10,000, and as you saw at the cash T-table, we credited the money. Yeah. So T-table for dividends, debited 500. Consultant rev. I'm sorry again, I didn't write the full name, but it should be revenue. So this one total, 1,600. Yeah. T-table for rent expenses, 500. Utility expenses, debited 100. Telephone expense 100. Salary expense 2,000. And when you've done all of these, it should look something like this. Yeah. So here if you look at the journal, we did debit for 10,000 cash, and we did 10,000 common share as a credit. Yeah. And if you just go, when you do the T tables, just imagine it's a string here and it's a T table. Yeah. And it should be debit and credit, and you just follow everyone and just put it where it belongs, pretty much. Yeah. And it should look something like this. When you have finished your T tables, when it's all added, it's now time to do this trial balance. It should look something like this. And as you can see, if the totals are equal, your calculations are most likely correct. So as you can see, the debit and credit, the total and the total, they're equal, and it should be correct. A trial balance is a bookkeeping worksheet in which all ledger balances are aggregated into equal debit and credit account column totals. A trial balance main aim is to check that all entries in a company bookkeeping system are mathematically correct. And as you can see, here is the total. So if you see, the 9,500 went in here. Yeah. The supplies, 200 went in here. Account receivable, they canceled, so we just write 0 or nothing. Equipment, 6,000, and these are assets, right? As I said before, assets right here. Liabilities, account payable, 300 credited. And just follow this strategy, yeah, and it should work. And once you have this trial balance for ABC company, the totals match, you put your assets, liabilities, and everything in order, it should look like something like this. And this is how it's done. And I'm sorry that I got some feedback actually from the way I'm talking. English is not my first language. It's my third. I'm just trying to give you some general information before I go into depth. This video was general. I went through it pretty fast, but I still haven't gone into depth yet. I just need to give you the basic understanding and everything for you to really do some heavy financial accounting. But before you can do that, you need to know these basic principles. Yeah. And as always, all of our content is available for free and hosted on YouTube. Subscribe to get notified whenever a new instructional film is released, and please leave a comment, which will give me an opportunity to grow. So what happened was that someone thought that I was lagging or something in my voice. I was talking, and I apologize for that. I'm just trying to be precise and give the right information out. Yeah. And that was that. End of part 3. So please subscribe for new videos, and I'll try. And the next one, I'll probably do cash flows and financial statements and more of that. We'll see what I will gonna do, but I will see you in the next video. Yeah.